Hello everyone. What if I told you that you don't need to wait for government reports to actually know how fast India is growing? You can literally decode India's GDP just by looking at a few bank results. Yes, you can go ahead and look at the bank results of top banks in India. Yes, banking earnings are the real economic pulse you have been missing. Let's decode this. India's GDP is the total value of goods and services produced in a year. Now, before going into the complex thing, I want you to please subscribe this channel, please like, share and comment. Now coming to this part of GDP. Now, what comprises GDP? GDP is consumption plus investment plus government spending plus X minus M. X is exports and minus M is imports. Now, when a company or a bank gives loan to the public, it comprises two things. One is consumption and the investment. The loan that is given to the public will either spend on consumption or the second one is in investment. Now, let's say in the case of HDFC Bank, HDFC Bank's loan book growth year on year increased by 6.7%, let's say hypothetically 7%. Now what you have to do is you have to subtract the inflation for the quarter that came by was around 2.1%. So let's say 2% of inflation. So 2% minus 7%, do you think that the GDP growth of India is just 5%, whereas a lot of people say that we have got GDP growth around 7.9 to 8%? Because this really tells you how you can just estimate the GDP. You never know, but what the data shows us, it's around 7.9%. But the real data that we are able to see, the bank growing almost around 7%, and the inflation in India is growing, and the inflation in India is almost around 2.1%. So what do you think? The GDP growth of India is 7% or 5%? You have to look out on that. So this is what really happens when you actually decode the bank results, but it gives you a pulse of how the economy is functioning. Because if banks are not able to grow, then there is a question mark on the GDP growth as well. Thank you.